Hello, my name is Marty Foreman. I'm a state specialist with the University of Missouri Extension, Ag Business and Policy. In this video, I want to review USDA's April World Ag Supply and Demand Estimates, the revisions that USDA made this month to the forecast. In summary, U.S. corn use was revised higher and ending stocks lower. So for the U.S., we wound up with increased use and a tightening of stocks. With respect to Brazil, corn production down there held steady, although they did revise Argentina's crop down 500,000 tons. U.S. soybean ending stocks held steady at 120 million bushels with some offsetting revisions to the U.S. balance sheet. Brazil soybean production actually increased 2 million tons from last month. That came as a bit of a surprise, while Argentina's soybean crop held steady. China's soybean and corn imports, their forecasts for imports were unchanged, and global corn ending stocks are tightening significantly. First, with respect to corn, this is a supply-demand table we took from the chief economist in the Ag Secretary briefing as part of the report. You can see here we've got the supply-demand table there on the left column is last season, and then the 2021 column is the current marketing year forecast. And you can see the blue there, the changes from last month. Of course, no changes on the production side, but we did see revisions, all increases on for corn use. We had feed and residual up 50 million bushels from last month. That was more or less expected based on the lower than expected March 1 stocks number that we got just a couple of weeks ago now. So USDA followed through and revised the feed and residual up 50. Also a 25 million bushel increase in corn for ethanol from last month. So that raised total domestic use by 75 million. And then we also saw a 75 million bushel increase in exports from last month. So overall, we have 150 million increase in total use, and that fell through to lower ending stocks, now projected at 1.352 billion bushels. And the stocks to use now falling below 10%, down closing in on 9% stocks to use. So a significant tightening of corn ending stocks, especially compared to last year, down 568 million from the prior marketing year. Regarding ending stocks, so this is just a graph showing the changes in USDA's WASDE ending stocks forecast starting almost a year ago, from back in May of 2020 when they first issued the projections for the 2021 marketing year. And you can see back at that point, they were projecting ending stocks at over 3.3 billion bushels. And through the combination of lower production, we had lower acreage compared to planting intentions last year, and then wound up with lower yields. And we wound up also with stronger use, especially on the export side. And as a result, we've over the course of almost a year, the projections have shaved off essentially 2 billion bushels off of the carryover on corn ending stocks. I just think it's kind of interesting to see, the progression here of how corn ending stocks in the WASDE have come down, now all the way down here to 13.5 billion bushels. And we start to look at next year, it looks like stocks will stay relatively tight even in the new crop marketing year. Respect to Brazil and Argentina's corn production, you can see on the far right, this is the latest update with Argentina. Their crop now for corn projected at 47 million tons. That's down 500,000 tons from last month, and down 4 million tons from last year. Brazil, on the other hand, that crop is up 7 million to 109. There was some maybe expectation that USDA might lower Brazil's crop a little bit. number held steady from last month, but they thought the trade was leaning a little bit lower, perhaps on Brazil's corn. Still a long way to go there with the safrinha crop in Brazil. The crop was planted a little late, and they are trending a little dry in that Mato Grosso and parts where they're growing that safrinha crop down there. So we'll have to keep an eye on that. Any reductions there could clearly affect prices here and the global supply demand. I wanted to make everyone aware of this situation. There's some chatter in the trade this week looking at this drought monitor map and comparing it to the last big drought year that we had back in 2012. You can see here, April 21, we're actually drier in parts of the country, even in the upper Midwest, than we were back in 2012, and a lot more red out here in the western part of the country. So as far as the Midwest goes, a situation here that is a little bit concerning. We'll see how things progress. Some of the forecasts I've seen for summer weather are leaning a little bit toward normal to below normal precip in some of this, especially across some of this western corn belt area. So this will be something we'll have to keep a close eye on. One thing that is different this year versus 2012 is we don't have this dryness out here in the southeast that we had that year. Looking at the price charts, see corn prices have been pushing higher. This is a monthly nearby corn future, so this is plotting the nearby futures contract, and this goes back to that drought of 2012 with the high back there, and then we moved into this pretty broad trading range affair, and then we've come out of that in recent months here, and we've got prices in the nearby contract, the May futures, flirting with the $6 level at this point. I think if we see push through the $6, the next real target here is this 62% retracement of this entire down move up. It would take you to about 643. Still no sign yet that the market's putting in a top. So we're still looking at a pretty strong uptrend in corn prices. This is looking at the December 21 or the new crop futures, and you can see how prices have really spiked up here following the planting intentions report on March 31. So we had a limit up rally that day. We gapped higher the following day, a little bit of a consolidation, and then we've seen prices move higher. And today, flirting with the $5 level on the new crop futures. So still new crop prices quite strong. And I think the market is looking at that outlook from the little lower than expected acreage numbers. If you recall, the planting intentions came in a couple million acres below trade expectations. So it looks like the balance sheet on corn will stay fairly tight and could tighten up significantly, if we're not able to achieve trend line type yields in 2021. So to kind of summarize here for corn, Brazil's production forecast up 7% year over year, but dryness still is a threat to that crop. So ways to go there to see how that unfolds. Argentina's crop edging a little bit lower. Some of the private estimates and even estimates on production from the Buenos Aires exchange this week, looking at a little bit lower numbers than the USDA. So my expectation would be, if anything, we may see Argentina's crop come down a little further. Yet exports to China are still quite strong, and that's been very supportive. We're looking at record corn exports out of the U.S. this year. Dryness concerns, we showed those drought monitor maps across the Western Corn Belt. So that will be something to focus on. The market will be extremely sensitive to any kind of a weather threat. Basis levels have been strong, both in the interior and at the export markets. So I would expect that to continue, especially as farmers, move into fields and start planting, and we slow farmer selling down even further. One thing to keep an eye on, though. Funds are holding a large net long position in the futures. So so far, we haven't seen anything that would trigger liquidation there, but they do have a large long position. So if we did see prices turn lower, once we get through, say, a positive or favorable planting season, that would provide some vulnerability to prices on the downside if they start to unwind that long position. Looking at the soybean market, soybean balance sheet, as I mentioned, of course, no changes on the production side, but looking on the demand components here, we had some offsetting changes. So USDA lowered the crush 10 million bushels, also lowered the residual. And so domestic use came down 30 million bushels, and however, exports increased 30 million. So we had offsetting changes there, leaving the ending stocks unchanged from last month at 120 million bushels, or 2.6% of use. Season average price held at 11.20. Or I guess that was actually up 10 cents from last month, up to 11.25. You can see, as far as the ending stocks go, of course, a big decline year over year in ending stocks from 525 all the way down to 120. Argentina and Brazil, mentioned Brazil's crop increased production for Brazil's number up to 136, a 2 million ton increase from last month. That caught traders a little bit by surprise. Trade was expecting steady or maybe even a slight decline in Brazil's soybean crop. So I think that's one of the reasons why we saw a little bit of weakness following the report in the soybean market. For Argentina, that came in at 47.5 million tons. Also a little higher than the trade was expecting. Trade was expecting something closer to 46.5 million tons. So the South American numbers a little bit negative, not dramatically so, but enough to kind of put the brakes on this rally. Soybean supplies remain tight. Now we've got, you can see here, this 2.6 ending stocks, percent ending stocks down here, the blue bar. If you look at the balance sheet for next year and using the prospective plantings number that USDA put out, and similar to corn, the soybean planting intentions came in well below expectations. So I think the market's job over the next, as we move through planting time, is try to encourage farmers to boost those acres if at all possible. So we've got a very tight situation for soybeans. It looks like going to persist, on into the new crop year. This is the May soybean futures, and you can see we've moved more or less into a trading range affair here over the last few weeks, with kind of a broad range between 1360 and 1460 on the upside, currently near the middle of that trading range. So if we do see prices push out over the top here at about 1360, then that kind of sets the stage for some follow through higher up towards these highs from 2013 and 14 near 1550. So we'll have to keep an eye on this as well. So far, the market's kind of holding that range, but if we do see something push out above those highs I mentioned, then it could be a pretty fast trip up to this 15.5 level. The November contract just recently posted new contract highs. You can see the spike up that we saw, similar to corn, following the planting intentions numbers that came in lower than expected. So we've got a contract high up here at 1285. Then we've seen a few days of consolidation here. So if we see the new crop push through that contract high, and this little chart pattern here is a fairly bullish looking pattern to me, kind of a bull flag formation here. It could set the stage for some fairly quick follow through to the upside on the new crop soybeans. To kind of summarize things here for the USDA, offset stronger exports with lower crush and residual, and left ending stocks unchanged. Brazil soybean production increased 2 million tons, while trade expected little change. and Argentina's crop fell, but less than expected. With lower than expected planting intentions, new crop prices will need to encourage additional soybean plantings, if at all possible here as we move into spring. And even with a large increase in acres, looks like soybean stocks are going to remain tight in the marketing year ahead. And that will make prices extremely sensitive to any kind of a weather threat. Well, that does it for this month's update. Be sure and check in with us next month. In May, USDA will issue their first global and U.S. outlook for the 2021 marketing year, similar to what I was talking about from corn from back in May, making those comparisons to May in 2020. So we'll have a full range of U.S. and global supply demand numbers from USDA next month. That's always something the market focuses on. That does it. Thank you for watching.